It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this Trading Tips video newsletter on wedge patterns, easy to spot money-making chart formations. In this video, you'll learn how to spot and interpret both bullish and bearish wedge formations. Let's begin. First, an introduction. What are wedge patterns? Well, they're similar to triangle patterns in that they're marked by narrowing price ranges. There are two types of wedge patterns: falling wedges and rising wedges. These patterns work the opposite of the way you probably think they would. Falling wedges are bullish, while rising wedges are bearish. And finally, wedges are somewhat unique in that they can either occur within trends as continuation patterns or be the start of new trends. What do wedges look like? Well, here are two line art examples. You spot wedges using OHLC or candlestick chart types, so that the opening, high, low, and closing price of a stock can be seen for each period on the chart. In the two examples below, the top lines connect the OHLC or candlestick highs, while the bottom lines connect the lows. You can probably see why these formations are known as wedges. Now let's look at a real example. Here's a falling wedge. Do you see it? Probably not. That's why it's always good practice to search for and draw in trend lines, preferably on a hard copy of the chart. Here. Now you can see the falling wedge. At the beginning of the pattern, daily prices fluctuated wildly, but they narrowed as the pattern went on. Then, predictably, the stock broke out of the falling wedge pattern to go much higher. Here's an example of a rising wedge. In fact, there's not only one, but two rising wedges on this chart. Do you see them? Now I've drawn them in. As you can see, traders would have made decent near-term profits trading on the first of the two wedges, and even better profits from the second one. In particular, take note of the huge decline at the end of this chart. To recap, wedges can be bullish or bearish. Falling wedges indicate a stock is very likely to break out and go higher, while a stock in a rising wedge pattern is probably a good short candidate. We didn't touch on this earlier in the video, but pay attention to volume. When a stock breaks out of a wedge pattern in heavy volume, it's an even stronger indicator. As you can see from the examples in this video, wedges are easy to spot, but only if you're willing to draw on the lines until you can obtain the necessary experience to see them with the naked eye. We hope you've enjoyed this video newsletter on wedges. Thank you, and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit TradingTips.com. Sign up for our free video newsletters. Become a successful trader by visiting TradingTips.com.